Hey traders, this is Ron. Happy Sunday. Hope you guys are having a great weekend. As always, everything in this presentation is for educational purposes only. We're going to start out here with the S&P 500 ETF SPY. This is a daily chart using TradeStation. Here were the December or Christmas Eve lows, the massacre that was occurring in December. Highly unusual. Market was going down. They said the world was going to end. Then the world was going to end back here in April. Then the world was going to end back here in August. Now the world is ending as we speak. Well, I guess it's not ending. So if I zoom in here, just for some context, we can see that on Wednesday, we broke below the 50-day. Well, excuse me, on Tuesday, we broke below the 50-day. Wednesday, gap closed lower as expected. That played out completely as what technical analysis would say. And then the very next day on Thursday, we got down to this 285 area. And I've been saying to watch basically 284, 282, something in here. We got the 285, pretty close, reversed higher, closed at the highs of the day, and it was slightly above average volume. Friday, gap up, closed near the highs of the day, and we got above the 50-day SMA in orange. That's our institutional moving average. So we closed above there. That's impressive considering how the selling started to hit the market. We have not closed above the red line, which is the 20-day EMA. If we get above there, the daily chart goes right back to being bullish. However, with that said, watch what happens if I go in here to drawing and I take this rectangle. And this is just approximate. I'm going to start it up here and I'm going to bring it down. I mean, I could even bring it into 285, but I could even go a little lower. And where are we? We're trading inside this box. So now we seem to have support coming in 284, 285, and then resistance up there at that double top, which ballparks around 302. So despite we're rallying, we're basically mid-range. Even if we get above the 20-day, yes, that is the highs would be the target. But for the market to re-energize its bullish momentum in a big way, we need new all-time highs. So right now we're range bound. Even if we roll over Monday with news, maybe that's overnight, that is bearish. I mean, as I do this video, it's almost 5 p.m. Eastern here on Sunday. But let's just say Monday we roll over. Okay, remember I said if we come back down here and bounce, I want to look for a failed reaction at the 50-day. We did not get that. Maybe we're going to fail at the 20-day. Be sort of close enough. But what I'm saying is, even if we roll over, we still now need to break the 285 or 284, something like that on a closing basis. Then we target that high wave doji back from the beginning of June. As of right now, walking into Monday, I would say caution, neutral somewhat. If I was bearish short the market, I'd be a little worried after Thursday, Friday's move and the close above the 50-day. But if we get above the 20-day, bulls get a little bit of an edge on the daily chart, target back up here. But again, overall, still range bound. If I go to a weekly chart, let me just type in weekly here. The box stays there. Look, even on the weeklies, we're range bound, which is no surprise. And let me actually go ahead and get rid of that box just for context. That's a big, downward move and rebound, almost like a high wave doji. Now, you start seeing those big ranges, high wave doji type action near highs. That's usually a sign of a top. Remember, these are weekly candles, but overall, we're even above the 20 period. So the weeklies, here's your low, higher low, consecutive 2 weeks, 3 weeks, 4 weeks. And this one right here, I mean, it barely intraday got below, but where was the close? Still back up here. We're still getting these higher lows. Bulls are in control. There's no if here. They are in control of the chart on the weekly basis. All right, let's transition into the diamonds. We'll stay weeklies here in the DIA. 50 period SMA acted as support again. Bulls are still in control here too. If we go to a daily chart of the diamonds, what do we see? Well, our low on Thursday was down around 257. We were pretty much watching 256-ish down to maybe 254-ish, that $2 range. Do you guys remember that? But what's interesting is both in the spiders and the diamonds, we never even got down to those lower lows. We reversed again. So I would still say this is a pattern of somewhat higher lows. We're back above the 50-day. We need to get back above the 20-day. Then we could go back up to that double top. Again, maybe a bigger range is developing right now. Let's take a look at the Qs, the NASDAQ. Well, looky here. The NASDAQ, if I zoom in real close, what did it do? It closed above both moving averages. Volume was spot on average. We almost had bearish engulfing of Wednesday's big down move. The Qs here look the best on a technical level. They did not breach the previous lows. Thursday's lows held, and boom, we get an immediate bounce. Again, this does not mean we don't roll over on Monday or Tuesday or Wednesday, etc. But right now, that's a pretty strong reversal, what we're looking at on the daily chart. If we go weeklies on the Qs, still above their 20 period. Weeklies are solidly bullish too. If we take a look at the IWM, this is the Russell 2000 on the weekly. Remember, these guys have been really underperforming. Here's the high from September a year ago. We still can't get above 160. So 160 is above it is bullish, below 145 is bearish. We went down and touched 145. Go ahead and zoom in there a little bit more. We went right in here, hit support, bounced. We still closed below some of these moving averages, but just because the IWM is below its 50-day, it's not a reason to get all crazy bearish because we have a box right in here. If I go to the daily chart, similar story. Let me zoom out. There's our bigger box going back multiple months. But if I zoom in, there's something a little intriguing. We have bullish engulfing on Wednesday. Thursday pop higher, but on the daily chart, the 20-day EMA in red and the 50-day in orange are both coming in right around that 151 area. It's about 2 points higher, so a little more than what we gained on Friday. That'll be a resistance target. We get above there, then we go back up to the previous high. You guys pretty much, got all that in the nightly videos. I just wanted to do a quick recap. If we move on to bonds, we'll do a look at bonds and gold. If I zoom out here, bonds are pushing back up. Target's going to be up there around 148. If we take a look at gold on the daily chart, GLD, remember I had those channels drawn in. We're still getting lower highs. We're still getting lower lows. Yes. And in fact, let's just go ahead and draw it. Let me just pop in here, do drawings. Let's go ahead and do, let's do like a trend line. I'll draw it just to make sure you guys are on it. You see that? And then you can see this one here. Even though we're above the 20-day and 50-day, overall, we're still downtrending. So caution on gold. On the daily chart, if we go to a weekly chart of GLD, we're still above the 20 period. So technically in the weekly, it is bullish. We take a look at silver on the weekly, it's still bullish. If I go to a daily, you see how we're above and below moving averages here. It's very choppy. Here's a high, lower high, pretty pitiful attempt at another high. And then here we have a low, here we have a low. So same thing's holding there where it's lower highs, lower lows. All right, here is Apple on a daily chart. Apple was up almost 3% on Friday on positive, what was reported as iPhone news. It looks like it wants to challenge the all-time highs from September, October a year ago. It was beginning of October when we went up there. It just completed. Here's your flagpole. There's the flag. We're popping out of it, so it's bullish. Amazon, on the other hand, not looking so hot. While it was up over 1%, $20 is only 1% on Amazon these days. The 170 held the support, but if I zoom in closer, we got a little bit of a hammer-like candle. Almost had two of them. It looks like on Monday and Thursday. I do not like hammers near support. So if I was trading Amazon, a couple things bother me. One, head and shoulders. There's a head, there's a left shoulder, there's a lower right shoulder, but the neckline is pretty defined, right around 1700, and it's a big fat round number. We breached 1700, the target's 1600, like I've been saying. Before Amazon could be considered bullish, even as the overall market is trying to get back up into a bullish posture, it would need to get above the 20-day EMA in red and the 50-day in orange. So Amazon, much weaker, while Apple, much stronger. And two stocks to watch here, SRPT. All right, so look at the pop-up on Friday. It gapped above the 20-day EMA on a pickup in volume. The target's going to be the 50-day, which is also going to come in here with the gap down. That's ballpark-ish 102 or so. That's 14 points higher. That's a big distance right now on this one. And then AVYA, it had a huge move. Lows were broken a little bit, but then there was immediate reversal, gap higher. If this thing can take out the 14, call it 50, 1450, the gap fill up to 1650-ish, and then all the way up to 18, maybe and a quarter. So big potential upside targets on that one. So that is it. Wish you guys a fantastic week ahead, and I look forward to seeing you in the next video. All the best.